Hey, hello there, friends. Can you hear me okay? How's that sound coming through? I think we are ready to roll. Excelente. Okay, great. Hey, thanks to those of you staying up over in Europe. I know it's late for you, but we're going to make this quick, a goodie, a quick one, but a goodie. So, what I want to do here today is share with you 5 ways to improve your winners, bulk up your winners, give them a bit of steroids, so to speak. My name is Walter, full-time trader. I wrote the book Naked Forex. We have a community of traders around the world. And for sticking around to the end today, I'll also show you how you can get some of the stuff we're talking about here today even faster if you'd like to do that. Otherwise, feel free to use what you got here today to improve your wins. Now, number one is sound is perfect. Thanks, George. Awesome. Thanks for staying up, Mark. I know it's kind of late for some of you. So essentially, what I want to do here is give you 5 things that you can do, you can take away on your own and see if they work. As with, any sort of, person talking about trading, you really need to verify this for yourself. And I would encourage you to verify this for yourself, what we talk about here today for sure. Now, what I'm going to share with you are things that I use, that some of my students around the world use, but you may not necessarily, it may not resonate. There may be maybe one out of these 5 that you like to use, which is fine, which is totally, totally cool. I'm happy. Actually, I should share with you the current trades I'm in. So I have a trade on the yen right now. I'm holding out for it was a touch trade up here at 109.50, 40 pip stop, and it was just support and resistance basically, blind entry, so to speak. I'm waiting for it to hopefully fall 30 pips and tag my 108.23 profit target. The other one I'm in, I took yesterday or overnight for me here in Asia. I'm in Australia, but this was a trendy kangaroo tail here, and that was on the Euro Kiwi as well. So we're holding out for a pretty big fall. It's a 12-hour chart down at 65.90. So that's a trending kangaroo tail. That's in the book Naked Forex too. So you probably know about those, but it's essentially a with the trend type pullback entry, and it's punctuated by that trendy kangaroo tail. So those are the ones that I'm in right now. But let's talk about what we're here to talk about, which is essentially uh, pumping up your profits. Now, the number one thing you can do, how many traders here, when you take a trade, you have a profit target? If you have a profit target, that's cool. But what are we essentially saying to the market? We're saying, look, market, you can give us some profit, but you can only give us this much. It's the exact same thing as a stop loss. We can say, hey, market, you can go against me, but you can only go against me this much, and then I'm willing to tap out and live to trade another day. Well, with profit targets, you're doing the same thing. So if you really want to take advantage of the nearly infinite volatility in the markets, what you really want to do is you want to use a trailing exit. Now, a real simple one that I talk about in the Naked Forex book is the 3-bar exit. Okay, so let's see here. Where would we actually? This is a oh, that's the wrong color. I'm gonna make this red so that it looks good. Let's say that you decided to get in this double bottom here. This is a whammy trade. So the first bottom is here, the market goes up, comes back down here, and this is really the signal candle right here, the bullish candle. Let's say that you got into that for some reason, all right? For whatever reason, you decided to get into that trade, and you were triggered right there. Your stop loss, of course, is below the previous low with the whammy, and so now the market starts going, and what are you going to do? What are you going to do? You could wait for the market to pull back, do that first pullback. I learned this from one of my students. One of the great things about having trading students around the world is I get to learn cool stuff too. It's a two-way street. And one thing that my friend taught me was he would always wait for the first major pullback against his position before he would even start to think about taking profits. And Yeah, see, some people here are saying they use 20 pips, or George says he uses, Mark says, George, like a lot of people here are saying that they use targets as exits, and that makes sense for a lot of for a lot of traders. However, one of the actually, just as an aside, one of the best interviews I've ever seen about this is in a book called Everyday Traders. Now, most of these guys are stock traders. The book is by Nick Raj. I actually know Nick. He's a great guy. And there's one interview with a guy named Scott Barlow, who's a currency trader in there. And his interview about exits is fascinating, completely changed my thinking. So this book I know is published in Australia, but you can get it on Amazon or places like that. And it's definitely worth it just for the Scott Barlow interview. It's fascinating. But anyway, I would definitely check that out. Definitely check out that book if you have, if you can get your hands on a copy. But so we see the pullback here, and then the market goes. So now I say, okay, well, what am I going to do here as my trailing exit? Well, what I can do is I can place my stop loss below the lowest low of the last 3 candles. Now, in this case, the stop, let's say that we're all the way to here right now. Let me advance this chart. I'm just going to show you an example of what the 3-bar stop looks like. Boom. So this 1, 2, 3, the last 3 candles, this candle just printed, we'll say. So we put our stop loss here because that's the lowest low of these last 3 candles. Then we get another candle, and we keep it there. We get another candle, we keep it there because that's the 3rd candle now, right? We get another candle, now we move it below candle 2, and so forth. We still keep it on candle 3 here, and then now we're stopped out. Okay, so that is an example of a 3-bar exit. And to be fair, this isn't actually the ideal market for a 3-bar exit. The ideal market for a 3-bar exit is when you don't have deep pullbacks. When you get these deeper pullbacks, that's where you get stopped out with this trailing exit. Whereas with other exits, that's not necessarily the case. But it certainly is the case with a 3-bar exit. You can also use like a reversal signal. For example, for a lot of naked traders, this big shadow right here would qualify. This right here would be a reversal. So you could just keep going until you got your reversal. So for some traders, this would be the reversal too. This kangaroo tail. I wouldn't do that. I would wait for the first pullback before I get get too excited about that. But that would be a reversal signal there, and that would be when they're actually, to be fair, this big shadow was never triggered. The market never went lower than the big shadow candle. But with this kangaroo tail, the market did go lower on the very next candle. My rule is it needs to go within 2 candles, basically. Okay? All right. Here's another buy right here. So this is a trendy kangaroo tail set up right here. That's also in the book. If you read about it, I'm sure I have videos about it on my YouTube channel. But so there you're long. You get triggered on the next candle, and if you're using your 3-bar stop, you would have been stopped out here. Actually, you would have been stopped out on this candle right here. So would have already been over. But remember, this is the first pullback. So this is the first pullback. If the market goes higher from here, this is where you might initiate your trailing exit. I like to initiate my trailing exit kind of late. So trailing exits allow you to take advantage of the fat tails in the market. Everyone know what that means? The fact that a handful of your trades are going to go for like 900 pips, right? So if you cap your target at 20 pips, even if you have like a lower time frame where you have a 10 pip stop and a 20 pip target, even then you're occasionally going to get 90 pip and 120 pip winners, and that even on the lower time frames, and those just completely change your expectancy of your trading system by having just a handful of those huge winners. And that's really what trailing exits are all about. They're about waiting around for the huge winners that add to that alpha for your system. And that's really what they're all about. So let's move on to number 2, which is to use the fixed ratio money management system. Now, I have an entire class about this, and I have a video about this, I'm going to give you the link to the video right now in the chat. And you can go into this later, but let me just explain to you. This was invented by Ryan Jones, and it's a very interesting way of approaching risk. Essentially what you do is you decide that you will up your risk as you make more money. Okay, I just put it in the chat there for you guys, so you have the link to that video. And that video, I talk all about the fixed ratio strategy, so you can watch that after this video or whenever you want. And also in that video, you'll get access to a class all about risk as well, a free class. So if you go to that video, it's a good place to get your hands dirty with this idea. But essentially, the way that fixed ratio works, it's very different to fixed fractional. Most traders trade fixed fractional. Fixed fractional is 1%, 2% risk, and so forth. What happens with fixed ratio is every time you make X amount of dollars, X amount of money, you increase your lot size. So you might be trading 1.5 standard lots. As soon as you make $1,000 or $2,000 or $3,000 in profit, you move from 1.5 standard lots to 3 standard lots. And then once you make that amount of money, 2 times that amount of money. So let's say you're using the level of $2,000. As soon as you make $2,000, you move from 1.5 lots to 3 lots. Okay. As soon as you make $4,000 now, you move from 3 lots to 4.5 lots, and so forth. That's how it works. But the video explains it quite well, and it's in the course as well, that free course. So go to that link if you'd like. That's a great place to get into that. So that's number 2, is fixed ratio. Number 3 is to split your positions. And this is what I like to do. So for example, on my Euro Kiwi trade, I'm actually going to take half profit down here at a little bit better than 3R. R, of course, is this idea of the amount at risk. Everyone familiar with that? R equals amount at risk. So if you're risking, I think in this case, I have 92 pips at risk. So I'm making trying to get 3.2 or something like that, my risk, if the market gets all the way down to my target. However, I'm also going to have half of my position with a trailing exit. So the trailing exit is essentially unlimited, but my aggressive, or I would consider an aggressive 3R target on the support level down here at 65.90, that one is actually capped, right? So when you do, this is a great way to kind of help yourself feel like you're winning no matter what. Because sometimes the market's going to stop you out, obviously. Sometimes the market's going to hit your target, and that's going to be the big winner, and the trailing exit's not going to make a lot of money. Actually, that's what happened with my yen trade. My yen trade, the trailing exit's already out. So when it sold off here, my trailing exit was triggered, and then this pullback stopped me out of my trailing exit. However, if I do hit my target, which I do think I will, I think it will get to 108.23. Knock on wood. but that, that 3R target is going to make more money than the actually it might be more than 3R, because it's 40 pips and I'm making 100, and no, it's about 3R. It's about 3R, yeah. So that's a case where the trailing exit didn't make as much, and actually a lot of times they're kind of like that, where the trailing exit it's okay, and then the target is the real nice one, and then occasionally the trailing exit will actually just kill it, and that's what you live for, right? We talked about that. But splitting up your positions is a great way to take advantage of both, like whether or not the market just goes a little ways or if it goes really, really far for you. So that's number 3. I can write those on here for you guys if you want. So number 1, obviously we talked about number 1 is trailing exits. Number 2 is using fixed ratio risk management, and you have the link to that video and that course is in the comments here. And then number 2 is fixed ratio. Definitely check that out. Number 3 is using the split exit. I talk about this in the Naked Forex book. This is the idea of having 2 different exit strategies. This is also a form of diversification, of course. So split exit, especially if one of them is trailing. And then number 4 is a bit weird, but this is having a big R target. Okay. Now, here's what's interesting about this. If you guys used, how many people here have never heard of Forex Tester? If you haven't heard of Forex Tester, just put in the comments. If you're using Forex Tester, say I use it. But if you're not using it, say never or something like that, and I'll know. Forex Tester is like brilliant. And what's great about it, it looks a lot like MetaTrader. You take trades. You can actually take trades on the chart just like you did, back in 2007 or whatever, 2015, 2017. You have these trades that you take, and you save all your data, and then you can export it to a spreadsheet. Now, here's where this gets funky. Forex Tester, if you haven't heard of it, okay, if you haven't heard of it, you need to seriously consider getting it. Now, I have a link for this. They will pay me if you use my link, so you don't have to use my link. It will give you the best price. I can guarantee that. But if you go to fxjake.com/tester, my trading completely turned around once I started using Forex Tester. It was a real game changer for me, I have to admit. It really helped me get to the point where I was able to make educated decisions based on how I modified my strategies and how I traded my strategies. So at fxjake.com/tester, you're always going to they're going to give you a discount there, but they'll also pay me like $30 or whatever bone they throw at me. But and I also have a course, and if you want, if you use my link, let us know, and we will send you a link to the course. Okay, let us know, and you can email the help desk, and they'll help you out. Okay, they'll just say, "Hey, I bought it through your link, and I want the course or whatever." So there you go. All right. So big R targets. The way that this works is Forex Tester. Actually, I want you to pay attention to this column right here. Here's where this gets interesting. These right here are the maximum moves of the trades I took. So you can see some of these trades, they were never triggered, so nothing really happened. Some of them ended up being losers, like this was a loser here for 103 pips, 108 pips, and the maximum move it made was only 35 pips in my favor, 50 or $35 in my favor, $51 in my favor, and so forth. But what you can do is you can dump all that data from your strategy in Forex Tester, dump it into a spreadsheet like Google Sheets or Excel or whatever you use, and figure out what percentage of the maximum move did my exit bag me. So in this case right here, what's happened is I've bagged 65.3% of the maximum move with my exit. Whereas down here, I bagged 5%. So I made $8.68 on the trade, but the trade actually went $182 in my favor. So what does that suggest to you? And this is what I'm working on with this strategy. I think that the exit is pretty poor. I think that this strategy needs a tighter exit, and I think that it's giving back too much profit. I could be wrong, but now I have the data. Like, this one made 97% of the move, 68% of the move. But then we also have 22% of the move, 19% of the move, 35% of the move, 29% of the move. So what I'm able to do here is look at these data and say, what's, like, I can average it out. But what's the average? In fact, we can do that right now. What's the average of the moves that I'm bagging here? What's the percentage average here? 49%. So my exit that I'm using is only making bagging for about half of the maximum move here. And I think I can do better. And this is actually a big tip overall when you want to improve your winners. Usually it's so tempting to look at the entries. The exits are where the money is. Really, really, truly. I'm not going to mess with the entry on this strategy. What I'm trying to do right now is figure out, how do I get a bigger chunk than 49%? Even if I'm able to get, 61%, 63%, that's a huge improvement for me, and I would be willing to take that. 68% would be awesome. So even a 40%, 35% improvement on this would be great. When I say 35%, I mean like 35% of 49%, right? Which is whatever that is, 17% or whatever that is. So definitely take a look at having bigger targets. Now, what I've typically found is that when I have a strategy that has like a 2-to-1 reward risk ratio, I used to have 1-to-1, 2-to-1 trades. Actually, back when I wrote the Naked Forex book, I've moved away from that. I'm getting much more aggressive with my exits. My win rate goes down, but the profitability of the strategy actually goes up. So if it becomes a psychological, fight to be able to withstand the pressures of having big drawdowns, but actually pulling out of them rather quickly when you get a win streak, which is kind of rare. So it's a little bit tricky, but usually if you look at the data and you test it out, what you'll usually find is that for most strategies, your target is probably too close to entry. Now, again, you could split it up. What if you have a 1-to-1 target and a 5-to-1 target? You don't have to have a 1-to-1 or a 2-to-1 and a trailing exit. You can, like, I have a 3-to-1 and a trailing exit, so I'm very aggressive. But you could have a 5-to-1, a 10-to-1 target that only occasionally gets hit, but when it does, it's like makes your whole year, that sort of thing. So definitely take a look at what would happen, and you can do that in Forex Tester visually too. I bought here and I sold here. Well, that was pretty good because it only topped out here, right? But this one I bought here and I sold here, I don't know. It might still go further. It might still go higher. So it might not have been such a hot deal. Let's go back here. And you can see this visually on the charts. Here's another one. Look at this. I bought here and I sold there. But guess what? It went all the way up to here. Like, I missed out on a huge chunk of profit there. And an R-based target would have taken care of that. I don't even have to use a trailing exit. Just a more aggressive R-based target would have done better. I think to use a Forex Tester, I don't know if you can actually use EAs. I'm not sure. I know obviously with Strategy Tester and MT4 you can use EAs. Forex Tester allowed me to see why high risk reward ratio are actually super efficient on the long term. Yes, Sendo nailed it. That's exactly right, Sendo. You have hit the jackpot. And I'm happy that that's happened for you. That's awesome. All right, so number 4 is just simply going for a bigger R target or splitting it up and using one that you're comfortable with and then a more aggressive one. But the data is going to tell you the story here. Looking at your data, you can say, well, what would happen if I actually did this? You have to be very careful. It's easy to get into that slippery slope of over optimizing. You don't want to do that. You just want to have broad, simple rules that allow you to take advantage of the moves in the market, not fine tuning and trying to get in it, really technical, I want to get 89% of the move or what have you. Okay, so here we have number 5, which is pyramid into profits. The interesting thing about this is, I'll tell you a story. So everybody know about the Bill Williams guy. He wrote a book called Trading Chaos, I think. If you go in here, what you'll find is that where are they? Bill Williams, there they are. The accelerator oscillator, the awesome oscillator, all these things that are actually defaults in the alligator, right? This strategy here that he explains in Trading Chaos, I think his daughter's pretty much taken over the business. But when I started testing this, and I actually didn't have Forex Tester at the time, I just had my charts and I would record my trades in my spreadsheet. I couldn't figure out why, it seemed like this should make money, but it didn't make money. I was unable to make money using Bill Williams' strategy. And I was embarrassed when I figured out exactly what I had done wrong. See, what Bill says, and he emphasizes this in the book actually, he says you should definitely add positions when you get more signals. And so he talks a lot about this in the book. And so when I tested it, I just took the initial signal and I didn't take the later signals that came. So what that means is I wasn't compounding my profits when the market made a really nice trend. His strategy does really well, during the trending phases. So that's where I made the mistake, and it's embarrassing to admit that I thought that I could trade, kind of a part of the strategy without really taking into consideration the aspect of his trend trading strategy that actually made the money, which was adding more positions. So there's a couple of different ways that you can pyramid into profits. And I'll show you kind of the type of market that I like to do this. Actually, let's see if we can find one of these Aussie pairs. Maybe Aussie yen. Yeah, this is a good example. Okay, let me share with you how I would do this. Let's say that sometime in the future, sometime next year, whatever, or next month, or what have you, we have a signal on the Aussie yen, and this is a sell signal. Okay, and let's say that at some stage the market comes down to 71.07, and then it breaks. It breaks lower, and then it comes back up. It hits the floor here and prints a kangaroo tail. That would be what I call a pinch. Actually, one of my friends, again, this is something that he uses. A student of mine, he's an awesome trader. He manages money, and he taught me this. Well, he named it really. It's a retouch, but it's a pinch. He calls it the pinch, and it's awesome. And so let's say that we get a pinch right here, and let's say that happens next month or whatever. Well, here's what I would say to that. That would be a really good candidate for a pyramiding, position, for pyramiding. Why? Because there's nothing here, guys. This is like where the bungee jumpers jump. Like this, there's all this room here where we have absolutely no price action, nothing. It's just empty. It's just free and clear. So if I have, let's say I use a round number as a target. Let's say that I get my sell here at 71, even, okay, 71.00. So maybe I target 69.50 down here, okay? So this is my target, 69.50 down here. All right. So what I can do, and my target is going to be green because green is my target. I use that color system. Blue is the entry and red is a stop. So I get in there. So if I'm selling at 71 and my target is 150 pips away at 69.50, what I can do is I can add a whole bunch of positions. Whoops, I didn't want to do that. A whole bunch of positions halfway through. So 50% of the way to the target, I can, again, I didn't want to do that. I can add these multiple positions here. And what that enables me to do is I can take advantage of the profit made on the initial position up here. And that profit will enable me to withstand these in case they get stopped out. So I can, every time it hits the next one, I move my stop loss, right? And my stop loss doesn't have to be at the entry of this one. So if this is my ultimate target right here, this 50 level, this is my target, right? I can add one here. I can add one here. And, after the one that's triggered here, I can move my stop. Or, okay, so let's say this first one, I call it a pancake. Okay, first pancake is triggered. Then I go, yes. All right, I'm in. Then now when the next one is triggered here, I don't have to put my stop right on the entry price right here because that's a pretty close stop, right? There's pretty likelihood that it's going to stop out. One principle in trading that we know is the closer your stop to your entry price, the more likely you are to be stopped out. If you put your stop loss 1 pip away from your entry, you're going to get stopped out almost every single time. If you put your stop loss 800 pips away It's going to be a little bit more difficult for that to happen. So I don't have to put my stop right on the entry of the first pancake. Instead, I can put it a little bit further back because I have all of this profit from the first trade, the original trade, that can, it'll be eaten up if I get stopped out, but at least I can give myself a little bit more cushion and maybe put my stop up here, right? So I don't have to use my stop, my entry price as my stop loss as my pancakes get triggered. Now, the other thing is, as it gets really close to the target here, I might just cash it out and close all the pancakes and the original trade, even if it doesn't quite hit my target. Because hey, if it's messing around and looking like it's going to find some support down there or whatever, I don't want to freak out about it. And I don't want to stay up all night watching the charts. That's no fun. So if it gets close enough, I can also cash out. So does that make sense? So pancaking, I like to do it in the after the market's already gone 50% of the way to the target, and I love to do it on charts like this where you literally have nothing in the way. You would have to go back to like a weekly chart to find where the support is over here, or where the likely support is, because we just don't have anything. It's an open season. I would hate to do it in where we are right now, because there's all these candles to the left. So that's kind of my pancaking principle, if that makes sense. Yes, Fernando, you are correct. You would be able to make the exact same argument for the top of the chart. That is absolutely true. I just have a bearish bias. I just have a bearish bias on the Aussie yen. I think this pair will move the greatest, when we have sort of our next, major financial crisis. So I think this will be the biggest trade, this pair. So that's why I'm keeping an eye on it. I think the yen will increase in value considerably, and the Aussie dollar will decrease in value considerably in the next sort of shock to our financial system. Ice Dragon, the new Forex Tester 4 actually converts it for you. So all you have to do is, but you do need to have the MQ4. So what you go insert indicator, and you install a new indicator, and it's got to be an MQ4 file. But the new Forex Tester 4 actually does it automatically. So you don't have to have it coded. You can also go to the Forex Tester forum and pay people to turn your MetaTrader 4 indicators into Forex Tester thing, indicators. But that's really no longer needed. As long as you have the source code, the MQ4 file, you can just upload it. Okay, any other questions, guys? I went through a lot of what I wanted to cover, and I just want to make sure that I get all of your questions as well, if you have any. Yeah, that does give more context to what I talked about. Yep. I don't want to get too stuck in the weeds, sort of thing. But yeah. I mean, the best reversal signals are always going to be where there's room to the left, right? I talk about this in the book, Naked Forex. But the other thing I wanted to share with you guys is you guys can get in our community if you'd like. Just go to fxjake.com/1 and you can try it out. So there you have it. Go there and it'll show you what our community is all about, and you can test it out right there. Just go to fxjake.com/1 if you like to test out our community and see what we have in there. Got over $7,000 worth of courses stuffed into the forum. We'll connect you with a trading buddy. You can ask questions. I'm there almost every day, literally every day, really. Sometimes on the weekends, I'm not on there that much, but I post my trades twice on Tuesday, Wednesday, Thursday during the Asian session, European session, and then I post videos one on Monday and one on Friday. And we have a live webinar on Monday where we start the week off looking at, what does the week look like and all that. So you can go to fxjake.1 and just have a taste test if you like to have a look at what we've got going in there at the forum. Most of the webinars I do are just for our members in the private forum, actually. I don't really do a lot of I can do more of them, but we have member intensives every month. In fact, our next one I think is next week. No, I think it's tomorrow. Sorry, it's tomorrow. So we're having one as this is being recorded. Tomorrow we have our monthly webinar with our members at Naked Forex Now. Yeah, so that's where we're doing that. All right, cool. Well, hey guys, I hope that this helps. I wish you a very happy trading. Thanks so much for spending time here. I will see you. If you're in the forum, I'll see you in the forum. Otherwise, I wish you very happy trading. Thanks for sticking around here, guys. And I hope you have some, I hope you have some things to test. All right. Thanks for your time, guys. Have a great day. See ya. Bye.